So good morning, active traders, and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun, your host, coming at you live from Colorado here on Saturday, April the 25th, 2020. I hope everybody's doing good. Hopefully you're doing better than the S&P, which has been downright choppy the last couple of weeks. We've had a relatively compressed trading range in broad markets. We've done that mean reversion pivot, and we recovered the 50 SMA, which was a key technical signal that the Wall Street quants are looking at. So we'll see if we hover above that or if we crash back down. We have 2,700 support, 2,900 resistance. Just a reminder, as always, all information is for educational use only. By watching this, you agree to not make actual trades. It's all for learning. This broadcast is brought to you in part by my Trading Open live room, and certainly I wanted to encourage all of you who are not yet a live room member. We cover both day and swing trading charts. Live classes 5 times a week, every day from 8:30 to 10:30. Usually a bit earlier than that and stay a little later, but at least 8:30 to 10:30 daily with my top picks. And if you're not yet a member, and if you haven't trialed that, you can get you can join for 3 whole weeks for just $7 and see if it's your cup of tea. Just at slightly over double subscribers over the last couple of years. Our numbers have continued to move up sharply, so it's great to see so many new folks on board as well. That's at tradingopen.com. Something for everybody. Anyways, we take a look at key support and resistance levels in the S&P. One thing to look at is always the metrics and the numbers in terms of where institutional money flow is coming in. I wanted to thank all of you for being here. Record-breaking new number of people subscribed for these shindigs, so thanks. We're at 5922, coming up on 6,000 resistance, right? 5,900 support, 6,000 resistance, so we'll see which number hits first. But anyway, thanks to all of you for making this the most widely attended, #1 registered that I've seen, at least, ongoing webinar series for lots of years. The other thing, in addition to key support at 2,700 resistance near 2,900 in the S&P to follow, is going to be your industry group charts and then your VIX. When it comes to scanning for what's worth trading, the first thing you want to do is take a look at your sector charts. For example, you want to see sector charts that are beating the broad market. Our pharmaceutical sector is clearly doing that. It's almost back up at ATH, right, at all-time highs. It's poking its way up there to the 670, 680, and handily beating the market. If you take a look at the Philly semiconductor sector, or SOX, it's also slightly up, but not nearly as strong as the pharmaceutical and biotechs are. So that's one industry group to pay attention to. Another is gold and oil and our coronavirus plays. One pick that I've been covering for our members for quite some time now has been Moderna, mRNA, and that one's been in the news a bit, and you can see on its breakout chart it looks reasonably strong here lately. It's kind of consolidating here between 44 and 56, but Moderna is definitely worth a shot if it continues on up. It's doubled in value from the 20s up to the 50s here, so Moderna is a good play. Another good one that a trader had mentioned was Rick had mentioned one, Beyond Meats, right? Something I was mentioning to family members is that may be due to a shortage of meat due to the meat packing plants getting shut down because of the virus. So I'm just speculating. The main thing is more buyers than sellers. Anyway, BYND is moving up nicely. That's makers of alternate meat products. Anyway, it's gone sharply up the last several days, all the way from 75.80 up to north of 100. And it's currently sitting here right under the 115. So BYND also of interest. From an industry group standpoint, you want to focus on other sectors, for example, like Barrick, which I used to trade when it was under the ticker ABX. And that's thanks to our trader Mura. I had mentioned this one last week, and it's a really good breakout chart. It's spectacular, right? It's doubled in value from 14 to 28. So you could have made some money potentially as you traded this the right way on the way up, right? It's gone really well. We've got a shooting star up here, so We don't want to touch it till it breaks out to new highs, breaks above this upward shadow of the 2850. But gold looks reasonably strong because of its volatility. And the sector itself, right? The gold miners have all been up sharply. You can look at Yamana and Harmony and some of the others as well. Now, when it comes to oil, it's kind of got a mixed bag. We got a bounce in oil, and whether you're looking at things like OXY or Halliburton or Apache or Exxon and Chevron and some of the oil refiners, as well as the distribution ones, that they've been slammed and they're slowly grinding up. But I've personally I've lost more money trying to trade bounces in oil than I've made, even though I've had both winning and stop losses in that sector. It's been relatively inconsistent. We haven't seen a V-shaped recovery. Neither have we seen any big rush of people coming in to buy oil stuff. So whether you're looking at things like OXY or UCO, that looks pretty dead, right? That looks horrible. Or USO. They've all been under extreme sell pressure lately. I really don't show much in terms of signs of life coming back, so I'm not too keen on oil. I'd rather focus my energy on sectors that are moving up and have good relative strength, like our coronavirus plays. All right, Gerald, I agree with you. That's a good ticker. See, traders asking about Eli Lilly and Abbott Labs. They're both a little pricey, but sure, let's pull those up. Let's take a look at LLY. Now, that's a good chart, but what's the problem with this chart? It's in a nice uptrend, and that's good, but the problem is it's too expensive for the range. You got to pay up. The leverage is bad. In other words, that's what I'm trying to say. That's not bad, but it's not as good as some of the other instruments. You know, for 150, 160 bucks a share, I'd like to see a 30 or 40 point delta in terms of the trading range. We do have that from the 120 to the 160, but proceed with caution. It's a pretty good breakout chart, though. I do like the directional volatility in that one. That one's definitely got buyers in charts, so that's a good chart. I like LLY. I'd like it more if it had bigger range, but I still like it. Terda asked me about this one too, ABT. That's gone really well too, all the way from the 60 up to the just under the 100 value. This illustrates a good concept of you sell decade values, right? Things like near 100, big round numbers, or like Tesla back right under 1,000, or TVIX right near 1,000. You've got obvious places to sell into. One of the tips that I think can help you become more effective in your trading is to look at exiting a bit earlier and using tighter trailing stops, because in this market environment, you've got lots of volatility and you want to be on the right side of it. One of the things that I found, at least in my own trades recently, that's helped me is to get out sooner rather than later. You know, for example, I was up doing nicely in my inverses, and they started to pull back, and I sold them correctly. I think it was the day before yesterday, off the lunchtime peaks, because they're starting to drop. And so one of the strategies that I mentioned to my live room members and to my swing scans members last week, which has been particularly one of my favorites, is the 3-day swing trading rule, right? Typically, you see trends last for up to a few days before they slow down. So be careful with those. Expect that your swing trades, with rare exceptions, they don't tend to last from week after week. We have some exceptional charts, like some of these that we're covering right now, that have multi-week swings. See, a trader had asked about the silver stock PAS. Yeah, that's okay too. But for the most part, I want you to be focused on trading volatility the right way. Which brings us to our VIX. If you take a look at the VIX, it's been in a downtrend ever since the peak back there in mid-March, going from 85 down to 35, or just 37 or so. 36, 35.93 to be exact. Anyway, It's been on the down low here. Support in the VIX is going to be 30 and resistance is going to be 45. And that's simply using the nearest institutional moving average lines, which is the 100 simple moving average here and the 50 up here. What that tells us as a trader, or as traders, is what? You may have a rally market if the VIX continues on down, and if the VIX loses 30 support, we'll likely see continued uptick or uprising in the market. But if the VIX flips back over the 45, that's critical intel. That's one of the most important market timing tips I will give you. The most valuable tip of the week. You have my word on this. It's the most valuable tip of the week. If and only if, IFF, if and only if the VIX recovers 45, then look out below for the stock market, and we may see a bearish retracement or a drop. So I'm holding off on scaling into my inverse ETFs and ETNs until the VIX holds over 45. And the reason is that's a key technical resistance area because it's what institutional traders use, using the 50, the 100, and the 200 SMA. So if we do recover that 45 in the VIX, then that tells us we will likely have continued selling pressure in the market. But for now, the VIX, again, it's inversely correlated to the directional bias of the market. So the VIX has been dropping as the stock market's been chopping. The VIX is dropping as the market's chopping, right? Which is what you would expect. Very, very much like an average directional index line, originally developed by J. Wells Wilder. The ADX is a good key volatility measure. And when the ADX line drops, volatility is dropping. And of course, more, breadth, use the ADX on individual instruments. The VIX is market wide. So from a market internal standpoint, I want you to start paying attention to things like your ARMS index. If you're day trading, we cover that in the live room daily, or trend, right? The ARMS index and the VIX. You need to follow your trend and your VIX every day if you're a day trader. If you're a swing trader, you don't really care about the trend much because that's more for intraday oscillations. But you do care deeply about the VIX, right? And what's it doing relative to our S&P broad market. So my point is, if this gets back over 45, then always use a logical if-then conditional approach. If the VIX gets back over the 45, then we would expect the S&P to at that point be trading down here near the 2,700. And if we lose that key 2,700 level in the S&P, watch out below, and it would be a smart time to start scaling into your inverses like SQQs and SOXS and SDOW, one of my recent favorites, at TZA, and the VIX ETNs like TVIX and VXX and others. Hey, Andy, good points on Gilead and Novavax. Yeah, Novavax was one that we covered in the live room for our members. It did really, really good volatile breakout. Hey, James, yeah, trade off I always do arbitrage plays, and I do play off the delta, the net directional change in key indicators, especially the market internals. That's one thing that's kind of like the missing link for traders, and it's not your guys' fault. It's because you've been taught the wrong way from a lot of the people that just focus on simple chart patterns. Professional trading is much more top down, where you're looking first of all at the broad market and trading accordingly. So, for example, I've been cautioning my traders in the live room to not trade much this last couple of weeks because the S&P's been in a relatively flat kind of dog paddle, think about dog paddling in a pool or something, or even better, think about a dog paddling in the pool. That's what this market's been doing. It's been in a consolidation after a mean reversion pivot, right? It came down from on high, dead cat bounce, bad kitty. Then a mean reversion rally, but the Wall Street's not sure that they want to keep buying into this pandemic. So for that reason, it's going to put the kibosh on buying pressure, and we've seen a stall and flatter candles, more candles like our doji pattern, or just flat out narrow range candle bodies that are relatively compressed, telling us we don't have as many big range trading days. In fact, we've got a lot of midday pivot types of sessions. So it's still in a directional uptrend, but proceed with caution. Going to zoom in on nice charts like gold. Or BYND. Really good, powerful directional volatility. And what you want to look for, again, is 3-day round trip. So for example, if I were swing trading beyond meats, I'd be selling yesterday because I ran up for 3 days in a row on the 22nd, 23rd, and 24th, or Wednesday, Thursday, Friday. We had 3 sequential days. Now Monday, it's anybody's guess as to whether or not we get a rally gap up or a retracement red Monday, which often occurs. That's why a lot of institutional traders kind of lighten up and go to cash, uh, like I often do, going into the weekend, because oftentimes you get a red Monday, or I may scale into my inverses if the market were down. Good point, Jim, about extended doji. Trying to read the comments here. Yeah, traders saying gold miners, semis, pharmaceuticals, looking good. Hey, Mukesh, yeah. Yeah, the Money Show, I will be speaking to the Money Show audience on Monday, May 11th. So I did send out an email with the link. They're doing their big virtual multi-webinar event to look at how to capitalize on market volatility. So certainly pleased to be speaking on behalf of Money Show again, coming up in just a couple of weeks to a big international audience. Another thing for your consideration is our pot stocks have been hot, right? Like Canopy Growth and Tilray. So I bought a little bit of this guy yesterday and Tilray as well. Tilray had an especially good chart yesterday, right? This is the 4-day chart of TLRY, one of the pot stocks. And it's finally breaking over the 8, so it's coming back to life. So we'll see if that one runs as well. Anyways, I'm going to wrap up here in just a minute. I wanted to thank all of you for being here. We do have lots of charts to look at, and you're looking at putting together a trading plan week over week. And you're trying to figure out, what the heck's worth trading. One of the things that can really help is to have a friendly voice, and I can certainly help with that. If you want to join my live room, Trading Open, serving thousands and now tens of thousands of traders since the year 2000 when I first started the room. So that's really where I put my majority of my focus for my business is 5 days a week. I used to run the room 3 days a week during Tuesday, Wednesday, Thursday, because those are the best days of the week on balance. Mondays and Fridays are often narrow range, but nowadays I run it 5 days a week, and you're certainly welcome to consider joining my live room service. I give even more in-depth, detailed coverage and live alerts and walkthroughs and answer trader questions and really good team community, right, of active traders. So certainly hope to see you in the live room. Let me know if any other questions. If not, I think we're going to wrap up. I had a bunch of questions. Let's see. Let's see a question from Bob. Do I trade? And no, I don't only trade charts that are above the 2-day highs. I prefer to scale into swing trades for 2-day highs, but I'll day trade any kind of pattern that looks strong, like a 2-day pivot. If something crashes with a 90-degree drop down to the 2-day low and then bounces, I'll often trade that as well, or inside range breakouts. A question from Srinath. Next week, several key economic data coming. Will it impact stocks? Very likely it will, right? One of my traders, Steven's, always nice enough to post real time when there's an economic report out, whether it's the PMI or unemployment or whatever type of report. But yeah, we always trade in reaction to and response to in the live room economic reports as they come out live. Hey, Amanda, question. Let's see, if I want to enter the inverse ETFs, at what time point do I make the entries? Well, I trade pre and post market, and I also scale in based on 2-day charts. So I'm not going to scale into my inverses unless they come back to life and go to 2-day highs. So still in lots of cash now. Hey, Andy, sure, thanks. And Ken, thanks for the sensible, logical trading advice. Well, I appreciate it. Let's see a question from Steve. Do I ever short stocks or indices? No, I just go long in the inverses. Let's see. Question from James. What delta do I use? More not a specific delta value, but just the concept of looking for change is delta, the triangle, right? Looking for relative strength in terms of not only the market internals and where things are running, but which of the charts are most likely to take out new highs. For example, if we're looking at a Moderna or beyond, I want to see convincing strength with volume and volatility up at new high price points. Now, I may day trade something like this inside the 90-day range, but for swing trades, it's usually best to wait till you get a 90-day high. Well, thanks, Ahmed. Hey, Jim. Thanks. Great Saturday. Hey, sure thing. Hey, thanks, Andy. All right, folks. Hey, Steve. Yeah, TVIX is down. I'm still in a few shares, but I'm not too optimistic until it comes back to life because it's got support down at 200 and it's been around 254, or now 237 as of yesterday. So it'll be interesting to see. The 200 is first major support. Major support's way down to 38.6, which is the 52-week low. So it's still distressed here, but if it comes back to life over the 50 SMA, I'll be scaling into it over, say, 265 or so. Yeah, this has got plenty of upside. All it takes is one negative headline, and this guy spikes right back up again. So I'm sitting on the sidelines here waiting for it to run. I'm in a few shares, but not heavy size because it's not going anywhere. And the reason is the VIX is declining, so of course its price is declining as well. What we're looking for in terms of volatility, we're always kind of volatility hunters. We're actually profit hunters, but we use volatility to try and leverage profits. And one of the things we want to look for is a new high or a new low in the S&P because that'll start attracting new buyers or sellers if we break the 2,900 to the upside or the 2,700 to the downside. But my final tip of the week for you guys is do what I do and don't trade much when markets are going sideways. I've not been trading nearly as much as last week or so than I was earlier because the volatility is low. Always look at taking a breather. When the market's taking a breather and it's cold or choppy like it's been the last week or two, look at it like, when the market's racing up or down, you're on the freeway. But when the market's sideways, you want to put the brakes on and go 15, 20 miles an hour in the suburbs, in the neighborhood, so you're safe around the kids and the dogs and the cats and all that kind of stuff. So that's what we're at now. We're in a friendly neighborhood, right? So what we want to see is the market start to light up and so we can get back on the freeway and start trading more aggressively. But I don't know about y'all, but it's been a frustrating last couple of weeks. I've lost this. I'm down for the last week. Not a lot, but still, any week that's down doesn't make me happy. But I correctly did not overtrade because the market's relatively quiet. So when the market's quiet and choppy, we do not have a clear advantage. It's very much like playing poker and you've got, 8-10 offsuit in your mid position, or your early position and you got a 6-2 suited or some crap hand like that. It's not like your late position with ace-king suited with a weak table and you can shove and take everyone's chips. That's not the market. It's like playing blackjack and you've got 17 and the dealer's got a 17 or got a 7-up. You likely get a push, right? We don't have a player favorable deck to work with right now. Not that I've ever done this, but if you're familiar with the whole thing of card counting, we've got a zero deck or a slightly negative delta deck where we're not in a +5, +6 running count on the cards. So we do not have an advantage right now. And as traders, we always seek opportunity when there's more buyers than sellers, or vice versa, depending on your direction. When the market's choppy and sideways, it makes perfect sense to trade less often, be more selective about your trades, still trade small size with relatively tight stops so that your cost of being wrong is small. But this is not a market. My best tip this week is this is not a market to be trading aggressively unless we lose 2,700 or get over 2,900 in the S&P. That's the most important thing I'll tell you, because what you don't want to do is, death of 1,000 cuts or overtrade a choppy market. You're overtrading if you're trading aggressively in a sideways market with narrow candles like we've got right now. Okay, you do want to focus on directional plays, like Trader Mira's really great pick in gold, right? Whether you're trading Barrick or other gold plays, or oil on a bounce, or coronavirus plays on breakouts, that's all well and fine, or the pot stocks on their recent bounce. That all makes sense, but we still want to play it on lighter share size and a little more safe in terms of our directional bias. Good point, Phil. Hey, Mike. Me too. I'm in the Springs, up on the north end of town near the Air Force Academy. Staying sheltered safely at home. Yeah, I'm up near research and up near Briargate. Anyway, yeah, Colorado's a great place to live. Hey, you too, Sir. Have a great weekend. You folks all have a great weekend. I wanted to thank you all for being here. Good to see another big turnout, and wanted to wish you the best for success in your trades. I'm going to go ahead and wrap up. We've got swing scans coming up in a few minutes with even better picks for my members. So anyway, see you guys next time. Just a final call to action. Do remember to, if you've not yet done the trial, do join the trial at tradingtheopen.com. For the low, low price of a mere $7 via PayPal, you too can become part of the team. And if you've already trialed it, you can join as a regular member. So that's where the magic happens, 5 days a week. 8:30, we get a really early start. We started at 8:30 in the morning, so you got a whole hour to look over our key charts, specific resistance breakout trigger levels, ask questions, bring up your own charts, and much more. So look forward to seeing y'all at the live room at Trading the Open. Take care, and see you guys next time. Bye for now.